big earning of the day, Hindustan Unilever, that stock was down after the company reported disappointing numbers for the first quarter. In fact, volume growth was quite tepid. Sales were slightly below expectations. Profits, of course, one can argue, were in line with estimates. The company is expecting near-term growth to remain muted. However, hopes of an above-normal monsoon is offering some respite to the management. Well, let's get in. The expert, Mangalam's joining in with all the highlights. Mangalam, we went into the earnings with you, giving us a 6, 9, 10 formula and on lever. Has it delivered?
Well, 9 and 10 have, 6 haven't. And just to break that down, it was 6% revenue growth, 9% EBITDA growth, as well as 10% PAT growth. The EBITDA growth as well as the PAT growth have come, but with the top line disappointing, that's where the key miss was. Because if you look at it, the volume growth at 4% versus our poll of 4.5 to 5% is what was disappointing. The total income was below expectations. What's even worse is that the 4% volume growth, that trend should come up for you. Last quarter, the 4% volume growth came by with 0 price cuts. But right now, the sales have gone down by 3.5%, or rather the sales have grown by just 3.6%, with the volume growing at 4% implies that the company may have taken some price cuts, and which is not a good sign for any company for the volumes to sustain if they have to take a price cut. The management commentary also was slightly cautious, so the total income was up 3.6%. Gross margins did improve at 100 basis points, but the management did say that commodity prices are now bottoming out, so input costs will increase, so that also we will see tapering off. EBITDA margins, again, like I said, EBITDA was up 9%, so the margins saw an increase of about 70 basis points. The net profit up 10%. The two key segments that the company has, home care revenues up 7% there. The margin saw a bit of an expansion, but personal care revenues, which accounts for majority of their revenues, includes the soaps as well as oral care and skin care segment. That one, the revenues grew by just 2.1%. That is a bit of a disappointment. The margins were more or less flattish. The management said that the market conditions are slowing. Commodity prices have bottomed out. The near term is likely to be muted, but they did offer some optimism for the medium term.
Okay, thanks a lot for that, Mangalam.
We're absolutely delighted that the monsoons, from all indications, are going to be reasonably good this year. And that certainly going into the future should augur well for our business. We play the different levers of business. Yeah. So there is no one-to-one correlation between commodity prices and the prices of our products. We look at the whole value chain. Yeah, we are relentless in driving efficiencies, and the whole idea is to make ourselves as efficient as possible. And as far as pricing is concerned, there are various factors which go into it.
Well, personally, I wouldn't be disappointed with the fall in revenues, provided the volumes had grown substantially. The point is, both revenue growth and volume growth are a very measly 3.5 to 4%.